Hey guys, happy Sunday. Welcome back to the Sunday watch list with me. I'm Senpai and with Stonks Society. So let's just, hop right into it. So I hope you all had a good weekend. And yeah, so for the weekly watch list, we're going to be going over 7 stocks for this week. Starting off with SPX, since, this is that general market indicator, we're going to hop right into all of these. And yeah, just definitely leave a comment down below if you guys have some other stocks that you are looking at, and tell me what I missed. But yeah, let's just hop right into it. So first off, SPX, we did get two very nasty candles towards the end of the week last week. This was expected if you're following with me, and we did get this bear volume trigger on Friday. So this was a very, very clean short level, and you could have caught quite a few points on Friday, especially on those zero data expiration contracts. Those really printed a good 300, 400, 500%. We did play Amazon puts that day, and those did go up to 1,000% gain, which is pretty crazy. It's just how a simple trend line can be so powerful. So, going into this week, I do believe we are quite exhausted. It is going to be interesting how futures do open up. However, I do anticipate that we will be seeing a maximum downside early in this week of 42.2695 roughly. So you can call it 42.27 to round up to the whole number. This is confluence with the 78.6% Fibonacci retracement, and I really don't see the market pushing lower than that before we do see some sort of rebound. So this here is my more bullish count for SPX, and this here is indicating that we are seeing bearish exhaustion here as we get down to these lower levels where we are expecting a potential bounce higher, and I do expect this bounce to be quite violent. I do expect us to have a good a good 200 plus point move with a maximum of 300 points. So would not position yourself too heavily short down here, as the risk reward is quite low. However, main level we do want to watch is this 42.27 level. If we do get a clean push below, this is going to be um, your very clean bear volume trigger for this week. You can short the market, and honestly, you can probably go risk on into puts for any stock really that's going to be following SPX. So below 42.27, this is where we're going to see massive downside with a minimum target of 41.56. And honestly, a very high likelihood we will retest this February 24th low of 41.14. So definitely keep your eye on this level, 42.27. Mark it on your chart. Set your alerts. Otherwise, if we do hold this relative region, I am expecting a very nice bounce going into this week. So yeah, and this is my more bullish count, so I can go ahead and show my bearish count. So you can see my bearish count here on this right side. It does differ. You can see it does dip quite a bit lower. However, the same rule applies. I do believe that we are exhausted in this first leg down, and we are going to be looking for bids between this 42.27 and 4300 level. This is going to be early in the week, depending on how futures open up and how they look Monday morning. It will dictate the direction of the move. However, as long as we do hold this 42.27, this bearish count is also in confluence agreeing with a move higher, just a relief bounce higher into this 4,500 region for SPX. And at that point, that's where we will dictate which bullish or bearish count we will be going with. As you can see, that's going to be a major pivot point potentially for the bear count, and that's something that we want to definitely pay attention to when we get to that point. So yeah, pretty straightforward there. we're going to hop into the next one. So, like I did talk about last week, on Friday we did play Amazon, and that was below this 29.50 level from last week. We did short it, and we were able to catch a 2.6% move to the downside on the stock, catching 76 points. And this was my target. It was extreme for intraday. However, the levels were taken out, major support across the market, and we did see that downside pressure. And we did bounce perfectly right off of our target. So, going to this week, a lot of stocks are looking very similar where they're quite weak and sitting on pretty important support levels. So Amazon being one of the more interesting ones, I will be watching pretty heavily this week and seeing how we react at this 28.75. So for this week, 28.75 is going to be my pivot point. If we can hold this level, we can start looking back to retesting the support of 29.50. However, if we do lose this 28.75 level, the doors do open up to quite a bit lower. So we're going to be looking at 28.18. And lastly, we can probably look for move down to this 2730 region. So, this is quite a large move to the downside, and this is something that we do want to catch. We have a good 2 to 4% downside if we do lose this crucial support level. So Amazon is one of these main watches I will be looking at early into this week. Next up, we're looking at Facebook. I can get rid of this calls because I am not interested in calls on this. So, Facebook, very, very choppy sessions for, all through February into current price. We did get this massive gap down from earnings in February, and since then, Facebook really hasn't seen any momentum. It's just been a lot of choppiness throughout. So, on Friday, it was a very, very crucial where, Thursday we did hold and bounce off of this critical level at 186. However, on Friday, we did lose it and close below 186. This is extremely bearish in my opinion. And if Facebook cannot, spring back and close above this 186 level and even better 190 plus early this week, Facebook is going to be looking for a lot of downside exposure. Especially with earnings coming up this week, the 27th of April, that's going to be on Wednesday. So, seeing what happened last time for Facebook on earnings, this really raises some flags and looking at what's going to happen because the last couple of times Facebook did report, it wasn't too strong, and we do see that the trend has been down for Facebook. So, obviously earnings, anything can happen. So don't, play earnings specifically, banking on a downside move. However, if we can't reclaim the 186 to 190 region early this week for Facebook, this opens up downside to mid 170s, then we get 160s and 150s. So, there's a lot of downside potential here for Facebook. So definitely keep your eyes on 186. Ideally, what we see is a retest of this 186 level and a failure. And that'll provide us with a very, very great risk reward entry to the downside for Facebook. Next, we have MU. So Micron. Chips here have been extremely, extremely weak. So these are going to be MU, your AMDs, your Qualcomms, TSMs, etc. All of them have been extremely, extremely weak and are on my watch list. And we do have SMH on the watch list as well, which we will be talking about. That is a ETF that tracks multiple of these semiconductor stocks. So similar interest there. But with MU, we do have this charted out, and what we can see is quite a bit of weakness recently. And this is, that common theme that we're seeing across the board. What we're looking for here, we did take an entry on this on Friday. On the break of $70. We can see $70 is a very, very important support. We have here, first time we broke below and then immediately spring back up into a rally higher. Here we did bounce perfectly off of 70, 1, 2, 3 times. And then this fourth time, we didn't get so lucky. We did close pretty confidently below $70. So what this tells me is there's relative weakness in this stock going into this week. So this week we are looking for continuation to the downside. Kind of very similar to Facebook setup. If we cannot reclaim $70 very early this week and push back above $71 very quickly, MU has quite a bit of downside. We are looking for immediate target at $68 and then a final target in this mid $65 to $66 region. And this would be, your first major target before we do get some consolidation into the next leg lower. Next up, we do have Netflix. So Netflix here, we did have earnings on the 19th last week, and we did miss quite a bit. Netflix, a giant of a stock, we gapped down quite hard, 35% plus on the stock on a tech giant like this. So, this does show quite a bit of weakness in the relative tech sector, and Netflix, obviously. So, what we're looking for here now is we have established a support at 210. So at 210, if we cannot hold this spot, just like Facebook, just like Amazon, just like Micron, Facebook, the critical level here is 210. Below that, we do see targets at 205 and 200. This is, a 10-point trade, nothing too crazy, but something that we would definitely want to watch, a good 5% move to the downside. And, options will pay out pretty nicely there. The trend is down for Netflix and it's a pretty strong downtrend. So if we don't see any relative market strength early in the week, Netflix is going to be susceptible to more downside. So definitely watch the 210 level. Below that, this week, we do get targets at 205 and 200. Next up, we have NTNX. This is a long swing that we are holding. We are in October calls. So, this is a very long swing for us, and we are down a little bit. So what we're looking for here, I'm not too worried yet. As there was quite a bit of flow going into this stock, and you guys can see we do have this inverse head and shoulders pattern. So, we do have this left shoulder, head, and then right shoulder forming. So for me, what I'm watching is this 2446 region here. If we can't hold this, the stock is going to look fairly weak. And what I do want to really look for is we do want to hold this relative region here of low to mid $24 range. If we can hold this, we do have lots of time on our swing contracts. These are October, and I'm not really too worried. I do expect this to possibly recover and have a move higher. To the upside, we're looking at $27.88 and $29 before, a big breakout occurs where we can see $30 plus. And, zooming out, we can see the full picture for NTNX. We are range bound currently, flirting with this lower range of the support region. So, just having patience here, letting the setup play out, and hopefully looking for that reversal into a move higher. And we can see targets up to $30 to $33, as high as $36. This is definitely a very high risk reward trade, and just have to have a little bit of patience here. So that's my view on NTNX. And lastly, to close it off, we are looking at SMH. So this here is, just like I alluded earlier, this is the semiconductor ETF that tracks a bunch of these semiconductor stocks. SMH, there's plenty of ETFs that do this. SMH is just my, ETF of choice for this, and is something that I've been watching. So in green here, we do have a marked, pretty important demand zone that we did have spanning back all the way from late 2020 to early 2021, and has been in effect all the way out to current price action. Last week, we did see another test of this lower region with the bounce, but evidently on Friday we did see relative weakness once again, and a very confident close below our important demand zone. Marked in red here, we also do have a small daily gap that's indicated here. And we did close and pierce through that upper range of the daily gap on Friday. So what we are looking for into this week, early this week, we're looking for continuation lower to close this gap around 234. That could be a potential bounce region. However, if we do lose 234, we do have a lot of downside onto the lower region here, and I would expect us to test 226, 223, and all the way down to possibly 217. So, very, very weak price action here from SMH. And this is, that gating factor that will help us make trades on these other semiconductor stocks. This week I am particularly looking at MU singularly. However, you can apply the same ideology to the other ones like AMD, NVIDIA, TSM, Qualcomm, etc. So yeah, that is what I'm watching for this week. I hope this was nice and clear. It helps you out, and you guys are prepared going into this week. So yeah, definitely leave a like, comment, subscribe. Let me know what you think, what you guys are watching for this week, and what you guys want to see from me in the future. But yeah, other than that, have a good week. I hope you guys do well, and yeah, happy trading.
I'm not the girl that I used to be sometime. I'm